On a chart like this with a persisting downtrend, another downward acceleration is quite likely, particularly with a well-defined slope recently that does lead to a descending triangle continuation. Now with this defined break under the 2860 level, attention now focuses on the last trend line segment. For the placement of the Fibonacci Arcs tool that has the full circles option checked. To better understand this, I highly recommend you also watch the other series on Fibonacci circles, because yes, we're still using the Fibonacci Arcs tool here, but it incorporates ideas from the Fibonacci circles tool. The short, clear, and recent trendline segment next to the breakout of this bearish continuation provides good conditions to use this method with Fibonacci arcs on the full circles setting. These recent structures of the continuation also give good, clear references for placing a trend-based Fibonacci time zone. And yes, I've also made material on this tool explaining it with real chart examples. The trend line segment we're referencing also has a good angle. It's not too shallow or too steep. So naturally, when falling price contacts an area where there are intersections with these two Fibonacci tools, there's greater opposition to lower prices even though it's an overwhelming downtrend. Unsurprisingly, this has resulted in a major delay to the steep drop, with a tendency towards more neutral to even bullish movement. And there's the normal tendency of this movement to follow the curvature of these arcs to some extent. Of course, it doesn't guarantee a major reversal back to the mid-28 area, especially with the recent return of stronger selling and the bearish continuation earlier, along with the broader bearish context we highlighted at the beginning of this example. So this is a realistic result where we do highlight the approximate area where a bullish retracement takes place to significantly slow the downtrend. It would be unrealistic to always expect to find the exact area of a major bullish reversal. And here at the very edge of the circle, intersecting with the 1 interval line, is a decent approximation of the end to the bullish retracement. Then when there is a significant bullish reversal, it's possible to apply a similar method, but it doesn't work out so well since the trend line segments are either too steep or shallow, and the swing points available to reference are relatively far apart, though they are quite recent and clear.